Indo Cement, second quarter, sales down 13% from a year ago, more than that quarter on quarter. If we look at the trend of Indonesian domestic consumption, we can see that in June there is a big rebound. So if we take this and put it over the top of sales, we can see that there should be quite a nice recovery in the third quarter coming up, and we expect sales to rise into next year. And this turnaround in sales since 2018 is still on. In the cash flow dropped in half compared with a year ago. The average is at 519, and with our sales growth, which is 3.4%, the average cash flow would rise up to 569. So cash flow, despite the drop in the second quarter, is, we think, also on a rising trend since 2018. The balance sheet is in net cash, although that's down to 7.7 trillion from 11 trillion years ago, back in 2014. But the cash is also now on a rising trend since 2018. There's a big dividend coming up, 1.85 trillion in the third quarter. But even with that, the cash will rise up above 8 trillion in the next 12 months, the net cash. Profit was down the most by 80%. The cash cost ratio is at 82% for the last 12 months, but we assume with sales recovering that will come back to 79%, and there's going to be quite a nice jump in net profit up to 2.16 trillion, which is almost 30% increase. So the free cash flow, assuming average investment, using our 1.6 with a 40% discount, gives a target price of 23,200, so back above the moving average. And you can see this one also, the volume is indicating, the share trading volume is also indicating a higher share price. So turnarounds for sales, cash flow, so we think the rising trend from 2018 will remain intact, and the same goes for the shares.